Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, May 17th at about 3:45 p.m. Eastern. Well, Wall Street's main indexes were mixed today as investors took a breather from the week's rally driven by growing expectations of U.S. interest rate cuts this year. The S&P 500 and NASDAQ are on course for a fourth straight week of gains, while the blue-chip Dow is on track for its fifth weekly advance, supported by strong quarterly results and showing inflation data that has bolstered the case for rate cuts from the Federal Reserve. And I want to throw this in. It just happened. The Dow closed today for the first time over the 40,000 mark. So that's history right there. So now let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at daily chart of the SPY, the S&P 500 Spider. This is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, right at the close, right near the close, the SPY was trading at $528.99, just right at the May 15th, which was right there, that was Wednesday of this week, all-time closing high so far at $529.78. Now, if you look left on the chart with me, since the lows in October of 2023, that was down at 409, the SPY was. From there, it moved up through its 200-day moving average, the black line, the 20-day moving average, the red line, and the 50-day moving average, the green line, and then the SPY just literally marched right up its 20-day moving average, an absolutely picture-perfect uptrend. And now, right now in May, we're moving or plowing through the 7th month of the uptrend. Now, we did go through a sell-off here in April, not too bad, and it began a few days after the SPY closed at $523.17. That was the all-time high at that time. Now, after completing that high, the SPY began to lose energy, fell through its 20-day, and then right here, you see how it fell below its 20-day. It's still above the 50-day, but right here on April 4th, it gapped open to 523, but then fell to close at 513. And when you see a candle like this that opens at the highs, closes at the lows, and then moves down below an important point, and the 50-day moving average, price hadn't been below that since last November. So that was a pretty big deal that day. So it closed that day at 513. From there, it slipped below the 50-day moving average down to the April 19th low down here at $493.86. It struggled to rally higher from there. It grappled and grappled with the 20-day moving average, which was inverted from the 50-day at the time toward the end of April, until May 5th, right here, it finally hopped as hard as it could above the 50-day moving average to about $515.60. Then on Wednesday, right here, of this past week, as we just mentioned, the SPY closed at a new all-time high, again at $529.78. And right now it's just a few cents below that. So I'm going to call you, say, well, where is it going to go from here? Well, absolutely nobody in the world knows that. I admit that right now. But we're in a good place here. We're in an uptrend. The market certainly looks strong. Could it pull back a little here? Sure. It could do almost anything. So let's put some boundaries on it here. I'm going to call our new resistance line up here at 530, 531 right here. Give it a little room. Now, one thing that traders many times don't do, you've got to think of support and resistance, both of those, think of it as a net on a tennis court. Now, while the net on the tennis court is a very distinct boundary, that's for sure, It does have some give to it. If you walk up to a tennis court net on a tennis court and just grab the top of it and move it back and forth, it has a little give to it. However, it is a definite boundary. So too does support and resistance act like tennis nets. They're boundaries, but they have a little give one way or the other to them many, many times. So we look at it like that. So we have, as I said, potential resistance up here at 530, 531. We have potential price support down here at what are we going to call it here? 524. I'm trying to draw a straight line where the last highs were. We have the 50-day moving average coming in and the 20-day at practically the same price. 50 days coming in at 514.17, the 20-day at 513.74. So let's just call it 514 right here. So that's potential support should the SPY start to move lower. Then we have support down here again at about 500, and again down at these lows at 494. So we've got a lot of potential support here should the market or the SPY feel like it needs to take a break. So let's go ahead. Let's be wise. Let's trade what we see, not what we think will happen, and trade carefully. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that closely follows our NASDAQ 100 index, which is composed of the top 100 non-financial stocks in the NASDAQ stock market. This is the ETF where momentum stocks reign, like NVIDIA, Meta, Microsoft, Alphabet, that whole group. Now, when I captured this chart today near the close, the Qs were trading at $451.50. Just a few points below the all-time closing high on Wednesday of this past week, May 15th. The all-time closing high so far is $452.90. Now, if we look left on the chart, we know that, like the SPY, the Invesco QQQ made a low in October at $342. We do note that, unlike the SPY, which fell below its 200-day moving average in this downturn here, the QQQ, the tech stocks, managed to stay above this important line, this black line, the 200-day moving average. Anyway, the Qs made a low in October of 2023 at $342, then bounced up as interest rates started to fall, and marched in a very strong uptrend, much like the SPY. A little more volatile, did fall through its 20-day a little bit, but didn't stay there for long, up to its all-time high at March 22nd. I think that's the candle right there at $446.38, and that was a 27% gain from its lows. So that is nothing to whine about. That was a very, very good move on the part of the Qs. Nobody can complain about that. Now, you can tell that it's starting to fall below its 20-day more here and more. And in early April, the SPY right here, this candle right here, the SPY gapped open to 442, but could not move. In this gap open, it could not move above the 20-day, the red line, the 20-day moving average, and then closed below the 50-day for the first time since November of 2023. So that candle right there was an uh-oh candle. Not meaning you had to sell everything, but you sure wanted to bring your stops up, because this is the very first time that the Qs, again, couldn't get over the 20-day when it gapped open, and then fell down and closed lower below the 50-day moving average. And a few days later, the 20-day, that was a big sign, big signal, and then the 20-day fell down below the 50-day moving average. It collapsed. And then the SPY did a dumpster dive down to April 19th to $413. Now, like the SPY, it struggled. It struggled to start climbing back up again from that April fall. Finally, climbed over the 50-day moving. It finally got over the 20-day. Then here on May 6th, it finally climbed over the 50-day to $440. And from there has been nicely moving back up to where it is now at $451.50. So now we say this has been tons of fun. Can it continue? Nobody knows that, but it certainly looks bullish. So now we have to put some boundaries on it so it will help us make wise trades. So now we're going to say we have resistance here at 455. That's our tennis net here. That's our boundary, 455. And then we're going to have price support, potential price support here. What was resistance becomes support, we hope, at 448 and 449. So I drew that line a little bit high here, but it should come in a little bit lower. 448, 449. We also have potential price support here at the 50-day moving average at $437 and change, and the 20-day moving average at almost 436. So right here, we have some good potential price support. We do have the May low here at 420 if we need it, and that was the May 1st low, and April low at 413. So that's how it stacks up here. Yes, it's been bullish. We have to remember that in order to go up, sometimes price has to go down to gather some energy, or it can just wander sideways with the bulls and the bears pushing up and down evenly. So next week, we will see if the QQQ can continue higher or if momentum stocks need to take a breather. So as always, please keep an eye on your protective stops. Our final chart today is a daily chart of the Energy Select Sector Spider Fund, the XLE. We haven't looked at this in a while. It has 22 holdings. The top holdings include ExxonMobil, Chevron, ConocoPhillips, EOG, and Schlumberger. Now, when I captured this chart today, the XLE right here was trading at $95.02, right above its 50-day moving average. So let's look at this a little bit. From its lows in January, and keep in mind, everybody had October lows, but the XLE pertains to energy, whether it's oil, gasoline, nat gas. It's companies that deal with energy. So commodities don't trade usually with the S&P 500. They have their total own patterns. So, but this is the big companies in the energy industry. So from its January lows, and that was actually down at about $70, it rallied back above its moving averages. And here I'm going to show you a pattern you may or may not have seen. From October, interestingly enough, the XLE was moving down. Then it made this low, then came back up to where it was, okay, because it was trading up here around 84, fell down and made that low, and then scooped back up, traded, then came down and made this low we talked about at about 70, then came up and then traded sideways and then broke out. So some of you know what I'm drawing here. I'm drawing what appears to be an inverse head and shoulders. Now, a head and shoulders pattern that happens at the top of trends or moves up is a trend reversal pattern, meaning if you see this on a chart at the top, or what could be the top, if price breaks that neckline here, then that's potentially a negative top reversal pattern. The inverse head and shoulders is a bottom reversal pattern. So this is actually positive, the way this worked out. So it broke out finally. It consolidated through the end of January and February right around at 84, 83, 84 right here. Then moved back above the 50-day, the 20-day, the 200-day. Then broke out here above 87 the first week in March. This is like the neckline here. And yes, it's like a tennis net. It's not always perfect, but that was the neckline there on the inverse. Then, right, it gathered speed the end of February. It went sideways, I guess, to gather some energy, pardon the pun, then broke out in March above 87. And look at the uptrend here. I mean, this is amazing. Above the 20-day moving average and a very steep uptrend up to April highs at 98.99. Now, we know that a ramp up as traders, we know that a ramp up like this is tons of fun. But we also know that it's unsustainable at some point, as profit taking always comes in. So if you're ever trading something like this, please put a trailing stop on your trade so that you don't give a lot back. So from these highs right here, it was about a week that it traded up here at the April highs at 98.99. And then it fell down here to $93, about $93.40, then rallied back up to almost 97, then down to 92, then managed to start climbing from there. It's getting into May. It started walking up the 50-day moving average, okay? So you can see how it's been walking up for this first part of May, the 50-day moving average. Today, it popped up over the 20-day moving average. The 20-day is coming in at $94.24, and again, price today is closing at $95.02. Now, this is going to be a trade. If it turns out to be a position trade, fine, but keep in mind this is a trade. It could get a little hectic, so I'm not going to give it a lot of room. If in the coming week the XLE can remain above the green line, the 50-day moving average, call it $94, okay? If it can remain above the 50-day moving average at 94, I will add a small position of the XLE to my trading portfolio, and I'm going to put my stop down here at $91. If and when the XLE can rise above 97, which is up here, this prior high, and stay there for 3 trading days, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the XLE in the coming week. And now here's some news from ToniTurner.com. We have lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my training programs. From our ever popular 7 steps to successful trading, to how to swing trades successfully, a great skill in this market, trade the trend to profits, one of my favorites, how to read charts, great for novices and brush up for everybody, 3 winning setups, again great for short-term traders, and bottom fish like a pro, which I love to do. Find out how these timeless online programs can help you earn more money quickly and easily. Be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.